How's it going? My name's Eric. Today is Thursday, the 12th of August, 2021. I did not get a video out yesterday. I was just a little too busy personally. Also yesterday, I don't think I did too much. However, today I was a lot more busy. Thursday is kind of my rolling out day, and I had at least 3 of those today, starting with good old Pinterest here that I'm still bag holding. Rolled this one out for the 3rd time. This time I rolled it out 2 weeks and I got just 14 more cents for it. And this week actually went against me another, $300-ish. Last week it basically was flat. I lost like 20 bucks or something, but this week I lost another 300. So the cumulative loss, if I would close it out right now, would be $1,200. But again, I rolled it out 2 weeks, collecting 14 more cents in credit. I'm still sitting at the 65 put. Then farther down here, let's see, MU had a massive move today. It moved like almost 2.5 standard deviations for some reason. I guess some big shot analyst came out and said their price target's only 75 down instead of like 90 or something like that. I don't know what it was. So anyways, it took a huge nosedive. I had the 76 put for this week. It just took a huge dive. It's now at like $70 or something. So I rolled this one out for 2 weeks as well, and I collected just 30 cents on that. If I would have closed it out today, I would have lost $593. And then let's see. Oh yeah, T-Doc here. I had the 149 put for this week. I decided to roll that out to next week, the 20th of August, and I got the 148 put, so 1 strike better, and I collected 82 cent credit on that one. So my grand total credit is, like 380 bucks, give or take. And if I would have closed that one out today, I would have lost $115, but I rolled it out for 82 cents. All right, I think that covers all of the rolled trades. Coming down here to yesterday, I opened a 26 put in plug, and then in RCL, I opened the 7287 strangle. And Tesla, I sold another vertical put for the 665, 655 strikes. And then today, the 12th, I sold a 100, 113 strangle in AMD. And then for PENN, I sold the 68, 78 strangle, both of those for next week. And then I couldn't help myself with plug. They had a little bit of a sell-off today, and I sold another 25 put in plug for next week. So for next week, I have the 25 put for plug and the 26 put for plug. Plug, I like plug personally. I don't know if their stock is going to go up or down necessarily. I just like the cool technology of the hydrogen fuel cells. But then also with plug, I get a really good return on capital. It only requires lower buying power, and then in turn, that makes my return on capital a lot higher. So plug's always tempting to me. And some days I feel like I should almost just open a position each day in plug because I get such a good return on it. And whether it's up or down, I would just go by what the chart tells me. But yeah, so anyways, plug's tempting, especially when I already had 26 put and then it sold off a little bit today. So it's like, screw it, I'm gonna sell another put. So going back up here to plug. Oh, I guess I was highlighting the wrong plug. This plug was 26 put for last week. This is the 26 put for this week. And then now I have the 25 put for this upcoming week as well. All right, so I'll take a quicker look at the details here. It's pretty much my kind of standard entry guidelines. I'm somewhere around the 30 delta on the naked puts. For plug, I collected 60 cents. I did 3 contracts because the buying power is lower. And then RCL, I did 70 cents, 2 contracts. Tesla, I did 2 contracts, collected 95 cents. AMD collected 166. PENN, 115, and plug for the second time for 42 cents and 2 contracts. Coming over here to the required buying power, plug for 3 contracts is only 1,300 bucks. RCL for 2 was 2,050. Tesla for 2 was 1,800. AMD for 1 is 1,500. PENN for 1 is 980. Plug for 2 contracts is 7 to 75. And then again up here to the deltas. The naked put for plug on my first position was at the 30 delta when I opened it. The strangle for RCL was at 10 and 13 deltas. Tesla was at the 17 and 13 deltas. PENN was at 16 and 23 deltas, so that had a little bit of call skew. And then PENN was the 17 and 21 deltas. Plug the second time around was at the 27 delta. And then the percentages here, I'm just going to do the pop. You can look at the P50 if you want. So with plug, that gives me 71% pop. Probability of profit, RCL 66, Tesla 81, AMD 70, PENN 70, and plug 72%. So yeah, in general, the last couple days here, I kind of just stuck to my normal little system, you know, naked puts and naked calls. I try not to go higher than the 30 delta. Every now and then you'll see like a 40 delta here or 41 right here. But in general, I try to go 30 delta or less. And then if I have a strangle or a vertical put spread, like Tesla here, I go farther out with my deltas, anywhere between, I guess you could say, roughly 10 to 20 as my entry points for each wing of the trade. You know, nothing's written in stone. You know, this one's a 23 delta and a 21 delta, you know, and this goes all the way down to a 10 delta. So it's just kind of a rough entry guideline, right? You know, nothing, you can always, depending on the position and what's going on, there's always flexibility. So that's just a starting point for me. 30 delta or under for naked puts and naked calls. And then depending on the price of the ticker, you know, strangles and vertical puts and vertical calls are going to be anywhere from the 10 to 20 deltas. And if you stick to those guidelines, you know, that puts you right around the 70 to 75, even 80% on average for your probability of profit at open. And that's exactly what I'm looking for. I am the casino stacking the odds in my favor. You give me a 70 or 80% probability of profit on every trade, I'll literally take it, because that means I'm going to win more than I'm going to lose. Sure, there's no crazy 1000% gainers. The most I can ever gain is 100%, right? But those 1000% gainers are total bullshit, in my opinion. You can't do those consistently, and those are just lotto tickets that other trading services try to charge you a bunch of money for, and your timing basically has to be perfect on most of those, where, you know, this one, these kind of trades, you know, on the daily, you know, when I'm trading the weekly stuff here, you know, each day kind of, you know, the entries matter a little bit more. But certainly if you put this system onto the monthly, you know, a lot of times trading the monthlies, you can enter the same trade like 1, 2, 3 days apart, maybe upwards of a week. And you can basically get the same price. Like the monthlies move a lot slower. So you could apply this to anything, right? And if you were trying to follow along with me, you know, roughly these are the same day in and day out, you know, especially the ones that move against me. They can, yeah, you can get in the next day at a better position than I can and still have a pretty good probability of profit, or actually even better. So anyways, feel like I'm rambling on. I think that covers everything for the last 2 days. I got stuff to do, so I need to get out of here. Let me know if you have any questions. Otherwise, I'll see you in the next video.